What is going on, everyone? We made it to YouTube. All right, let me get audio check real quick here on my end. All right, it should be good to go. Good morning, everyone. Lotus, Cleo, glad to have you guys. Humble, good morning. Fabio, morning to you, sir. Amy, good morning. Eslam, hello to you. Alessandro, thank you. Eslam, thank you very much. Everything should be good with the audio. You guys should be able to see the weekly chart for Nasdaq. Chris, good morning. Christopher, nice to have you back. Glad to be here, guys. Joe, Yannick, good morning, fellas. All right, guys. So for today, I want to let you guys know kind of where I'm at in my trading, and we'll get into the business for today. I will tape read some price runs, let you guys know where it's going before the fact, call it candle by candle, lend you guys my draw liquidity, what I'm expecting for the session, and it'll be a light tape reading session for my end. I will also take questions that you guys may have. During the session, since I won't be actively managing my money, I'm able to divert my attention and answer some questions here with you guys. I'm coming off a monster month, so I'm looking to preserve equity. While we're in the session, once I get through the pre-market analysis, I'll touch on a few factors there, things that I do when I get up a lot, or if I go down a little bit into drawdown, right? And it's a very similar protocol. I sit still, I sit on profits if I'm up, or if I go into a little bit of drawdown, I do take it nice and steady getting out of it. One of the things that I've learned is taking a break, either if you're doing really well or not doing so well, has been extremely helpful for maintaining that equity curve smooth and upsloping, right? So we'll go and get into those details. I'll touch on that as we get into the session. But for right now, we got 9 minutes till the open here. Want to go into my analysis, what it is that I'm looking at here for today. And with that, I'll take some questions as we're going through the session. See quite a few familiar names in here. Glad to have you guys. And we'll be looking to do more of these on YouTube here going forward, guys. So first things first, let's start with the economic calendar. We have high impact news at 8:30, and then we have 10 a.m. medium folder news. So expecting fairly decent volatility this morning, considering that we do have high impact news on the schedule for today. All right, so going over to Nasdaq, I actually want to take our attention to the US dollar here real quick, and then we'll segue right into Nasdaq. All right, so for the US dollar, we had a bullish bias going into the week, looking for this weekly fair value gap to be traded up into. Then, as I was saying, very similar to what I was sharing with the Nasdaq, is then we'll let the market show its cards once we get into those premium levels, right? So we have this weekly imbalance, markets traded up into that, and then we refine that more specifically on the daily chart, right? And then we refine the imbalance on the daily chart to this range here. You can see the market's nicely drawn up into that. Let me make that a different color. And then the market's nicely drawn up into that imbalance. Now that we're inside that inefficiency, like I tell you guys, let the market reveal its hand. Let the market show what it's going to do, right? And then what that means, so you guys can know on the hourly chart or a lower time frame relative to the key level I'm looking at, right? So let me explain that. If I'm looking at like a 15-minute key level, and then I'm saying, all right, I want to see how we trade there, well, then I'm going to look at a 1-minute chart, 15-second chart to see the market structure that builds inside of that 15-minute higher time frame level. Now, applying our understanding that the markets are fractal, if I'm looking at a daily key level, then I'll look at the hourly chart or the 15-minute chart for clues that market structure is shifting. So let's go ahead and get into what that looks like and what constitutes a reversal from a key level. So we have the daily fair value gap that I gave you as the draw, but I'm not bullish US dollar, right? I'm bearish macro US dollar. So what we're looking at this as, or at least the way I'm internalizing it, is the market's being pumped up into a premium. They continue downside. But I don't force that bias. I'll let the market just show me what it's going to do. What does that mean? All right, well, they pump it up into the premium here. We see that on Wednesday. And then I'm reading for clues in the order flow, right? So what does that mean? Well, if order flow is bullish, down close candles and gaps should support price. What do we see here right after Wednesday after they pump it into that gap? Break down through this fair value gap here. So that becomes now what? Our inversion fair value gap, right? And then you can see how that inversion fair value gap, the algorithm works it, and now sending price lower. So now we have all this sell side down here and all this sell side down here for the market to want to gravitate down into. Make that red here just so I can have it on the chart. The immediate draw here is going to be this low here. And then we have, again, all these lows back down this way there. So that's the draw as long as we remain below that inversion fair value gap. And that's what I mean with bearish market structure, right? So we priced in an intermediate term high here inside of that daily fair value gap. All right, so that's all for US dollar. Just wanted to touch on what we discussed in the weekly outlook. Now, let's go and take our attention over to Nasdaq. All right, so 6 minutes till market open. Before I get into my analysis, you guys bullish or bearish today on equities? What are we looking at? We get a feel for the room. Bear, okay. Bullish, bearish, okay. Bull, okay. Bearish, okay. All right, so mostly leaning bearish, but we do got a few bulls in the chat. Okay. Well, I got good news for all you guys. Every day, the bias is bullish and bearish. There's money to be made going up and going down. All right, so good mix of bullish and bearish. Awesome. Would dollar be correlated? Has not recently, Jay. One of the things that I've been seeing, right? Nasdaq has been cratering. We've been calling this market lower. Well, we called this rally higher into that weekly fair value gap to just be a short-term premium to continue selling off, right? So everything is bearish on equities, and at the same time, the market structure and the order flow is bearish on dollar. So it is not correlated in the way we would expect it to be. So like I was covering on Sunday, one of the things that I do when that's the case is I cut through the noise, right? And I just go right into the charts because the chart's going to tell me what I'm looking for in that particular asset. I do like intermarket analysis behind my trades, right? So if I'm looking for something in particular and I have intermarket analysis behind it, then it just makes it even better. However, if I don't have it, then like I shared with you guys this weekend, just cut through the noise, go right into the charts, break it down top down, and it'll tell you what it's going to do. So let's go and get into that now. Looking at the weekly chart here. We had this weekly imbalance. That was initially our target on the week, but I was very specific with you guys on the weekend, right? I was not saying I'm looking for higher prices because I'm bullish, right? I'm looking for higher prices for a short-term premium to then continue selling off, right? So if I'm looking for lower prices, I want to study how we trade inside this weekly fair value gap. One of the things that you want to keep in mind is we as smart money traders, we're not looking at random zones, right? So I'm not looking at a huge rectangle on the chart that's over 350 points and just hoping for a reaction. We're looking at very specific levels. The low of the gap, lower quadrant, and then the 50% of the gap. And look at where they made the high of the week there. Really nice, right at midpoint. So they traded up higher, hit midpoint, and then they left the upper half open, right? That's signaling weakness. So when I'm telling you guys, we have a weekly fair value gap. It's a key level. We need to see how we trade there. That's what I'm referring to, right? Market slams into the lower half, can't get into the upper half, and now we're continuing to sell off. And I was getting some questions in the Discord. Once the market pumped higher, are we still bearish? Of course we're still bearish, right? They just pumped it into a premium. That's exactly what we want to now sell short, right? Because now they sent it up into a premium. Now it's going to be allowed to rotate to the downside. All right, so let's go down into the daily chart here. And then, all right, so we got about 3 minutes. Let's go ahead and speed through this. So wick here, I gave you the up close candles here over the weekend saying these up close candles should be resistance if we're going to remain in a longer term sell program. Hey, Jeff, good morning to you, my man. These up close candles, we're not just looking at an ambiguous range. Same thing with the wicks, right? So if we're looking at wicks, we're going to look at what? The midpoint, right? So midpoint of the wick overlaps with that weekly fair value gap consequent encroachment or midpoint. And then look at the bodies there respecting that. That's signaling to me algorithmically the market's heavy, right? So market trades up into it. Bodies can't get above midpoint. Market smashes lower. I was getting some questions in the Discord as I was mentioning, which is, are we still bearish? Absolutely, right? And we're not just going to the new week opening gap. We're likely going much lower, right? So it's not just new week opening gap, fill it, keep going higher. We're looking for it to keep selling off and making lower lows on that daily chart, which is what I'm expecting right now. I'm very happy to pivot, be flexible if I need to, but as of right now, nothing is bullish in the stock market. So that's my higher time frame macro perspective. But nonetheless, right, bulls and bears make money, right? Like even yesterday's trading, they had the Judas at 9:30, and then they had a really nice run into the equal highs buy stops there, right? So every day, even though the weekly, the daily chart may be bearish, there's opportunities up and down all day, every day. All right, so looking at the actually want that level on here, so let me let's keep the charts clean. All right, so we have the midnight opening price here. The draw going into the next week is going to be sell side here. And then eventually these equal lows down here is what I'm suspecting. One of the things that I use SMT for, so I'll go and explain SMT here in the next few seconds while I got him. So when I have a key level that I'm looking for, right? For example, like a weekly fair value gap here that I'm expecting to be what? The market pumping up into a premium, building in an expensive market inside that weekly fair value gap, then rotating it to the downside. So that's a market maker sell model, but it's also power of three, right? Accumulation, manipulation, distribution. When I'm expecting a turning point from a key level, one of the things that I look for is SMT, right? So SMT for me is something that's very contextual. Like I need context for SMT because if not, and from what I've seen, there's SMT up and down all day long and it can be very confusing. But if I'm already looking for a key level, right? For example, a weekly fair value gap, and I want to see a reversal take place there, and I see SMT, that's confirming to me distribution and that we're going to reverse. So looking at the charts here, we got a lower low for S&P. Whoops. And then we got a higher high for Nasdaq, right? That's bearish inside of a weekly fair value gap, right? So understanding the context, that SMT inside that weekly fair value gap, extremely influential for the reversal that we saw, right? So once you have a key level, you wait for the algorithm to show you these specific signatures to show its hand to you. And then it's a lot easier to predict what it is that you're looking for. And then we got a really nice run from the highs up here into sell side here, new week opening gap. And we may want to keep working down into sell side here today. All right, so let's go ahead and break it down here. 15-minute chart. Get into the intraday price action now. So sell side equal lows here and here. Breaking back down through this fair value gap here. So what I'm watching, as long as we remain below this gap here, we'll make that red. As long as we remain below that gap, my attention is going to be on the sell side here. Just for the purposes of framing the liquidity though, we do have equal highs up here as well. So we'll see how they want to use it. And then we have buy side up here. But I am thinking London's priced in the high of the day. So we don't need to come all the way back up here. So as long as we remain below this gap here, my attention's on the sell side. So let's go and work into our lower time frames. Perfect. Yeah, equal lows here on the agenda. So when there's equal highs like this and equal lows, it can be slightly more challenging. So what I'm having to do in those instances is go into the charts and read order flow. So what does that mean? Well, this 15-minute gap here that we have here, this imbalance, if we remain above it, supported, then it'll be used as an inversion gap, send price higher, right? But the fact that now we're trading down through it signals that the market is bearish, right? And if it's bearish, it's going to attack one of two things, right? Liquidity below the market or inefficiencies resting below the market. All right, so looking at the charts here. Want to see this act as an inversion gap here. So this fair value gap that was used as support when it was rallying, want to see this act as an inversion here. So meaning we're below it, use it as resistance, sell off. So looking for sell side here, as long as we remain below this inversion gap. Just observing the first 2 minutes of trading. Don't take what I'm saying as investment advice. I'm a financial analyst, not a financial advisor. All right. All right, so let's get the midline on there. I like how they opened on this candle, traded higher. Then you see how they slammed into the midpoint there, but they couldn't get it above. That signals weakness. If you have a draw on liquidity, that gives you timing. Boom, boom. Let's go back up to that 15-minute chart. Got to frame some further liquidity pools here, because if they keep sinking this thing, want to have some key levels here. So there's that sell side delivered. Now what I want to measure is, do they want to keep accelerating this thing lower? So we got sell side here. And then I'll extend the rejection block through here. All right, so they've ran out that sell side. I never think it's a good idea to chase below old lows, right? If you're going short here, you want to get short before the price run, right? So one of the things that I say constantly when I'm working with traders, or even those on my team that are analysts that trade, that manage capital within the business, is we have to predict price runs, right? Not chase them, right? So if you're seeing these equal lows here, well, then we have to get in before those equal lows are traded to, right? Like for example, on the inversion fair value gap here. So what that's going to help you do is not chase the market, right? And then react to it, right? So after we take out the lows, now try to sell short, right? We have to be able to predict the price runs for them to be higher quality trades. So now that we've taken out that sell side here, I want to see how we trade, because we're still in the first few minutes of trading. They can still want to run it higher because these highs here are really clean. So in my mind, what I've seen now is equal lows taken out. So now they put in traders short on a breakout. So now I want to see, do they want to attempt to work it higher into the buy stops here? Looking at the S&P here. So S&P did not take out those lows. So we have a short-term divergence here with Nasdaq. So I want to see if that holds. So far though, the bias is still bearish for a bit, right? Again, I want to go up to that daily chart. One of the things that allowed me to just frame that short setup into the equal lows, or that price run, is my understanding of the daily chart, right? The daily chart being heavy bearish. Okay. So those are things that help support trade ideas that I'm taking. All right, so yeah, with that sell side taken out, if that SMT does hold, then my attention will go to the buy stops here. Eslam, why do you think we formed the high of the day in London? Because on a bullish or bearish day, 70% of the time, London will make the higher low of the day. Not all the time, but it's a rule that I use for the most part. So if I have a directional bias, like for example, I'm bearish on the day and I see London's already created the turtle soup high of the day, then many times I will anticipate that in my analysis being the high of the day. It doesn't have to be though. The good thing is institutional order flow is going to tell me, right? So I'm able to pivot. So for example, we were looking for lower prices using that inversion gap here to send price lower. But then once they took out that sell side, I immediately did what? Took attention to buy side here, because now we're seeing a change in order flow, right? We had S&P at the lows with S&P. This imbalance here is getting traded to and through. So I want to see this act as an inversion gap and see if they want to take it into the buy side now. So that's the good thing about reading order flow, is you may initially have a bias, but if you can pivot and be flexible with what the market's giving you, then you can frame price runs. Like I was telling you guys in the pre-market analysis, the bias is bullish and bearish, right? There's price runs up and down. For upside though, I would favor S&P. S&P is probably going to give a bit of a cleaner run to the upside because it didn't make that lower low. Unicorn already done for the day. Nice. Still getting ads during the live stream. Yeah, may have to fix that. I'm not sure what's going on there. The whole setup for the YouTube thing is above my pay grade, so maybe I have to talk to those that are working on it and see what I can do for you guys. So also paying attention to this opening range gap here. We opened with a gap down 90 points. So now that they've taken out short-term sell side, looking for the opening range gap as a draw. So you're going to have these quadrants on your chart, and the market's likely going to drop into it. Told you guys, though, I do favor S&P for the upside because S&P did not take out the lows. S&P is going to give a stronger run into its buy side here. and here. So these relatively equal highs. SMT at the lows, fair value gap, drops down into it. That's a long setup in the buy side. And then also looking at the opening range gap, 2 factors there, right? So we have mid gap here. So midpoint of the regular trading hours gap. Let me just put that on there by itself, right? So we have midpoint of the regular trading hours gap as a draw. And then that high there, which is those relatively equal highs. All right, so this fair value gap here, extend that through. We'd want to see the active support here. You can take it in the buy side. So for NQ, same thing. Let's go back to electronic trading. I'm going to take these levels off. I don't like to keep the chart too busy, but just be mindful of the mid gap there. Chris, 1 minute fair value gap becomes reclaimed fair value gap. 1 minute inversion. Which one, Chris? This one here. This one that we use as an inversion for the sell stops. Yeah, I got you. Yeah, that does become a reclaimed fair value gap. Absolutely. So what my man Chris is mentioning there is this fair value gap here that provided the context for the short setup in the sell side becomes a reclaimed fair value gap on the buy side of the curve, right? So when we're bullish, what was an inversion becomes a reclaimed gap. Yeah, for sure. Absolutely. Which time frame do you use when looking at SMT? 15 minute chart for the most part. But if it appears on the hourly chart or a higher time frame, even better. But 15-minute chart is personally what I look for. We'll go to one chart here in a minute. I know I just called we're looking for higher prices here, so wanted to keep up S&P for that price run, but we'll go back to Nasdaq here shortly. Nasdaq is weaker than S&P though here, as you can see. All right, so what I'm watching right now, if we are going to be bullish, get into the buy side there, we don't want to lose this fair value gap here, right? So this fair value gap here should not be lost if we're going to continue trading higher. So what's going through my mind when I'm reading the tape and I'm reading order flow and I'm getting a feel for what side of the market they want to take it to, I'm relating with these key levels, right? And I'm seeing how the algorithm is relating to these key levels, right? Is it finding support? Is it melting down through it? So we've traded through that inversion fair value gap. That's strike number 1. This imbalance here should be the last line in the sand because I don't want to see us trade through this fair value gap here and this up close candle because now that's no good for higher prices. And if you look at the 15-minute chart, the market structure isn't the cleanest so far. All right, so we see a deep retracement here, but the market not taking out the candle that forms the fair value gap. So I'm still suspecting we got the buy side on the agenda. And then we also have a lower time frame S&P here. So Nasdaq did not take out that low. ES did. Why is that SMT important to me though? Because the draw is higher. My man Retain wants to be done with his day. Need to have a word with the market makers about that so they can get you on your way, Retain. All right, so looking at the, again, that opening range gap here. Mid gap, right? So that opening range gap is always going to serve as the draw in the first 30 minutes of trading. So we have mid gap there, and then the buy stops here. So we want to see them blow those out. All right, so ES dropping back down into that gap here. Starting to see a lot of overlapping price action. Which is early on in the session, starting to signal a potential high resistance liquidity run. what all that means to me is, for example, we have a gap here, right? This fair value gap. You see how we dropped into it once, twice, and now we traded higher. Now we're back into it a third time. That's not something you like to see, right? For the best fair value gaps, it should hit the imbalance, right? And then quickly reprice away, not spend more than 2, maybe 3 candles. As we start to build market structure and lay several bodies over an inefficiency or a particular range, it starts to become much, much more difficult price action. So that's something that constantly, especially in the first few minutes of trading, I'm trying to identify early on, because what I'm measuring when I'm trading is, are the conditions, like if I'm like in here risking capital, what I'm having to determine is, are these conditions conducive for me risking my money? And the quicker I can identify it is or it isn't, the better I'm off in my trading, right? So if I can recognize a high resistance liquidity run day, the best thing I can do is size down and reduce my trade frequency, right? So that's why I'm pointing those things out to you guys, because my attention's constantly keyed up to those things. Because what you don't want to do, what I used to do a lot early on, is identify a high resistance liquidity run and keep trading till 11 o'clock. And then I would wonder why my accounts were roasted by the end of the session, right? And then over time, I learned skill sets to be able to help me avoid blowing up my accounts in what people call choppy market conditions or a high resistance liquidity run. So now that we're breaking down through that fair value gap, the buy stops here aren't as probable to be delivered. Let's go up a time frame here. If you look at the market structure on the 5-minute for both S&P and Nasdaq, it is pretty sloppy. So we have some sloppy market structure here this morning so far. So whenever that's the case, that puts me in a place where I just have to wait for more information. Waiting for more information, meaning, because now we have these equal lows here on S&P, right? So meaning that they take out one side of the market, reverse it to the other, leave the range, right? Stop spending a lot of time inside this gap. So we're seeing a lot of overlapping candles. And it makes it slightly more difficult to peg the direction when you have the equal lows and the equal highs like that. So as of right now, I'm neutral. Neutral, waiting for more information. I want buy side taken first before we go down. Yeah, that'd be reasonable, right? That's what I'd like to see. If they're going to take it lower, I'd like for them to take buy side first, and that'd make for a lot easier price run the frame to the downside. If they bump buy side, then take it lower. One of the things that I would struggle with a lot early on as well is the market would be unclear. Like right now, I'm neutral, right? Because yes, my higher time frame is bearish, but these equal highs make it difficult for me to frame a high probability run to the downside. So I'd like to see them take out that sell stop, the buy stop, sorry, then take it to the downside. But what I would do a lot early on is I would have more of a 50-50 neutral bias, and I would just insist on doing something to take action. And that's one of the worst things you can do, right? So if it's ever unclear to you and you're waiting for more information, just be patient, right? Let the market show its hands as to what it's going to do. So far, if we look at the open here on regular trading hours, and you look at the 5-minute chart, right, we haven't done a whole lot, right? So patience in the first 2 minutes is very important. You don't want to have already taken 75 trades in this, is essentially what I'm getting at. So after 9:30, they've already taken it lower in the sell side. So max pain, max damage is running it up into the buy stop too. So far, the market structure is a turd if you look at S&P. So about 15 minutes in, as we were getting into 9:45, I'm starting to identify signatures that are potentially indicating it's a high resistance liquidity run, a lot of back and forth, right? So let's say I was trading today. How would that influence my trading? Well, I would reduce size right away if I ever identify these conditions. And at the same time, I'll reduce my trade frequency, right? So I'm not willing to be aggressive and take a lot of trades in conditions where the market is in a high resistance liquidity run. Because when you look at market structure like this, it's a lot harder to read. At least for me, it is. So one of the best things that you can do as a trader, right, is identify what market conditions you perform the best in, right? Identify which market conditions you don't perform as well in. Then from there, develop protocols to be able to help you navigate those different market conditions. So some balance here for S&P. We did trade down through it so far, respecting it. But here we're kind of no man's land for S&P, right? We have the equal lows here and the equal highs. So not as easy of a read for the S&P for me. Watching this imbalance here, now that we're back above it, want to see if we can stay above this fair value gap here. Retained man Fridays are made to take money out of your pocket. Yeah. Fridays can be tricky. Fridays can be a little tricky. Hence why when I'm up really good on a month or a week, never a bad call to be patient, sit still, and enjoy peace of mind ahead of the new week. So that's how I'm glad I was able to get on here with you guys. I was able again to accomplish everything I needed to in my trading across all my accounts. Very happy with the month. Delivering world-class mentorship, coaching, so was able to squeeze in a day on the schedule to come on here with you guys. So that's why we're here. We'll look to schedule more days as I can on the YouTube, but have to work within my schedule. Then please leave a like for the stream. Please do. I would really appreciate that. All right, so this imbalance here, we see the market finding support there. So now I want to see, can we stay above it? I wouldn't want to see it come back down into it. Not that it would change it, like, because it could still come back down into it and go higher. But for the purpose of seeing cleaner price delivery, I don't want to see the market come back down into the range again. Look at how many overlapping candles we've already seen, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Almost 15 candles in the same range. This is a high resistance liquidity run. Let me show you by contrast. Let's go to yesterday's action. This is a low resistance liquidity right here. All right, it's a lot easier trading like this. These days is really easy for me. I'm calling the market up, down, sideways, up. It's really easy to call a market when it's running like this low resistance liquidity run. And it's a lot easier to trade it as well. When the market, and let me show you the signatures that are distinct, right? Fair value gap, 1, maybe 2 candles, gone. Fair value gap, 1, maybe 2 candles, gone. Imbalance, 1 candle, leaves it open, explodes. Right? Clear draw on liquidity, equal highs here, clear as day. The market's going to want to reprice up into that. Drops into the gaps. A little bit of consolidation here, but still respecting the imbalance, trading higher. A lot easier to read a market like this that's in a low resistance liquidity run, right? When the market is like this, it becomes slightly more difficult. So you see why I was sharing that with you guys at the beginning of the session, which is if it's a high resistance liquidity run, it's in your best interest to identify it as quick as possible before the account is gone, before the account's in deep drawdown. And I know because I lived it through firsthand experience, bleeding out capital on these days here. It's no fun. So look at the 5-minute chart here. We're at 950. So we're losing this gap here, right? So losing this gap is not bullish. So looking at the 5-minute chart here, off the open, right? What have we done so far off the open? Not a whole lot, right? Off the open, quick price run into that sell side that we had, back into the range, and now we're just consolidating. All right, so losing that gap again to the downside, no bueno for higher prices. So we got sell side here. And then looking at the S&P, equal lows taken out, right? So this gap that we were looking at, see if it wanted to find support here. It couldn't, broke down through it, use it as resistance, and now we're in that sell side there. So not the easiest read here this morning. Market structure is pretty trash today. Christopher, leave likes people. This guy's legit. Appreciate you, Christopher. Thank you, sir. Ahmed, can you mark the first presented fair value gap on Nasdaq and if it is useful today or not? So one of the things that I've learned is the first presented fair value gap is discretionary, meaning that just because it's the first presented gap, I've learned that it needs to be the first presented gap within narrative, right? So technically here, this would be the first presented fair value gap here. But because it's such a small gap, I'm personally not putting a lot of emphasis on it. So for S&P, this would be the first presented fair value gap here. You can see how influential it was on the price action, right? When bullish, it uses it as support. But then when it's bearish, it breaks down through it, and then it becomes an inversion gap, right? Use it as resistance, can't get the midpoint, right? Signals it's weak, and then it rolls down into that sell side. All right, so I covered US dollar for you guys. That's for the currency traders for the most part. So you guys should be going long your foreign currency, right? Sell side is the draw here. And you can see US dollar really heavy, right? So clear bearish order flow for US dollar, which again for currencies is bullish, right? So euro bullish, right? Pound bullish, and that's on the back of weaker dollar. All right, so S&P's weak, imbalance here, trading up into it, respecting it. Let me zoom out. I need to see what targets we got for the see what we're working with here for the ES. All right, so we got sell side all the way down here for S&P. It's very similar to what I'm looking at in Nasdaq, right? So the pre-market analysis I did for Nasdaq, essentially the same thing for the S&P. But looking at it here, we have sell side equal lows down here. Are we going to get all the way down there in this daily candle? Probably not, but crazier things have happened, right? We're in fast markets. So what I'll do is I'll break this wick down, and we'll look at the quadrants here. So next draw for S&P, if we continue to accelerate, is going to be upper quadrant, then 50% or consequent encroachment, midpoint there. Yeah, market's heavy, market's bearish. So looking, yeah, so gave the targets already. Let's roll down to the hourly chart. Yeah, so the market's heavy. One of the things that would have made it easier for me to trust lower prices right away would be if they would have ran above that buy side, right? Taking out the buy stops, then sinking it is personally what I would have looked for me to take action and go short. So for me to go short today, I would have liked to seen the buy stops taken, put traders in long on a breakout. Anyone that's short, stop them out, then run it lower. That would have given me the confidence to go short. And some days, I want to let you guys know that does cause me to miss trades as well, right? Like if I'm bearish, like let's say they just keep sinking it lower here and I got nothing on so far. That's something that does happen, right? And it's normal in trading. So if you're ever trading and you're waiting for a confirmation, something you're looking for, and the market just takes off without you, it's going to happen, right? What you don't want to do is then let that affect you psychologically, emotionally, and then do things outside your trading, chase price, and react impulsively. Because I've lived through that, and it's not easy to make a trading career doing impulsive shit. All right, so going up to that higher time frame for Nasdaq, same deal, right? So if we continue to accelerate lower on that daily chart, we have upper quadrant here, and then midpoint of that wick there. That's if we continue breaking down. What would tell me we're going to keep breaking down if we remain below this fair value gap here? Right, so we have this imbalance here. If we remain below that, then we can keep selling off. We're about to get into the 10 o'clock hour here. Want to see if the market cleans up because again, so far looking at the structure on regular trading hours, it's been a really shitty morning session here so far. So by having those rules and protocols, right, like I shared, for example, I wouldn't be short right now because I didn't have to see the run on buy stops. Am I happy that I wouldn't have been put in? Absolutely, right? Because of the market structure that we're seeing right now. I'm glad when my models, my protocols don't allow me to engage in this type of price action here. In my book, it's a win. And that's only because I lost a lot in these types of conditions here. So you get more of an appreciation for the risk over time. So let's see what they do with it. See if they want to keep it below this imbalance here. Keep selling this thing off on Friday. All right, let's just go to S&P. All right, so 10 o'clock news, looking at that hourly chart. Again, we have that sell side down here. And then as we were discussing here, we remain bearish as long as we remain below this fair value gap here. So 10 o'clock, let's see if they clean up the price action here a bit. I want to see them leave this range here. Like I keep referring to this 5-minute chart, really nasty market structure in here. I want to see us leave that range and see if we start to see low resistance liquidity run signatures, right? Like kind of what I was showing you guys in yesterday's price action. So 10 o'clock news, they spiked it lower into the equal lows here. These buy stops here are just too clean, right? Even though top down, we're bearish, right? Top down meaning weekly chart is bearish, daily chart bearish, right? Hourly chart seeing bearish order flow, right? Even though everything is pointing to lower prices, these buy stops here are just a little too clean for my liking to the downside. But the good thing is, right, doesn't matter what I want to see, the market's going to tell me, right? So as long as we remain below that gap here, as we're discussing, we're likely going to see lower prices on the day. That's the good thing about order flow, is it allows you to be flexible in your analysis on what you're looking for, right? So initially looking for example, lower price or higher prices here, but then if the market turns and trades through a key level, then that can allow you to pivot, switch your analysis, look for sell side based off what the market's giving you real time. How are you potential 5-minute breaker? 5-minute bearish breaker, I'm assuming. Here. Yes, sir. Yeah, these two down close candles, bearish breaker. Yeah. Slim, would you consider long since we have S&P with S&P, and if we get a displacement through the 1-minute fair value gap? Yeah. So if we had an S&P at the lows, the market starts to displace through this imbalance, maybe leave a breakaway gap, leave signatures that it's low resistance and it's bullish, then I could absolutely consider a long into the buy side. But as of right now, everything is still sell side. Sell side flows or bearish flow, basically. But yeah, if it gave that exact scenario, then that would allow me to be flexible and look for buy side. All right, going over to the dollar, about to punch into that sell side there on the hourly chart. So you see for currency traders, how easy it becomes to frame your trade setups when you know where the dollar is going, right? So we're expecting it to trade higher into that daily gap, price in a premium, break down, shift in market structure here, fair value gap, rotate to the downside. That's a swing trading model in and of itself. I personally don't swing trade, so like I'd use this analysis here to trade intraday on currencies. If I was trading currencies, I'm not trading currencies. Just so we're on the same page there. Not over here secretly trading euro or anything. If I was, I'd let you guys know. But like I'm saying though, with the bearish bias for with the targets that I gave you that are now delivering, I would use the like intraday chart and like buy a silver bullet or a fair value gap on the euro chart. And that's what I would do with that bias. Let's see him dig it down to that sell side just so they can give me that target. So close. Should just ramp up, accelerate into that low. Really nice price action this morning for the US dollar. See, so this is an example of a low resistance liquidity run, right? Really easy to see where it's going. Daily chart is bearish, hourly chart is bearish into this low here, and then just look at the beautiful market structure, right? It breaks down, fair value gap, the low of that hourly inversion fair value gap, bumps it, imbalance, trades up into it, breaks down, fair value gap, hits it, breaks down, imbalance, respects it, imbalance, trades up into it, stays in the lower half, breaks down, fair value gap, retraces, short-term premium in this range, and continues selling off. A lot easier to trade in this type of market structure here when it's easy to see where it's going top down and the market is in a low resistance liquidity run on the lower time frame. Come on, they're right there. Let's go. I want to get back to S&P or Nasdaq. There you go. So there's that sell side on the hourly chart that we talked about here in the pre-market analysis. So now what I want to see through that low is, do they accelerate it? And then my attention goes to the sell side down here. So that's the draw for dollar. Nasdaq, again, everything's still bearish, top down, right? So looking for this sell side here. And then let's also get the quadrants here. All right, so we just hit the upper quadrant of that wick here. So the wick, because the equal lows are so far, I don't want to demand that the daily candle has to get all the way down here for me to see targets delivered. So what I'll do is I'll get low hanging fruit targets, right? Like the wick here, right? So the upper quadrant's a draw. So if I was short, I could take partials there. And then I could also look for the mid gap here. So let me just go ahead and leave on mid gap. So if we keep selling off, my attention goes into consequent encroachment of that wick there. All right, so that sell side's been delivered here on the hourly chart. All right, so hourly chart, sell side here, smoked. Next draw is the 50% of that wick, and then if we really start to accelerate through that, then we can get all the way down to that sell side there. And again, that's because top down the market's bearish, it's heavy, right? All right, so 1 minute chart gave you this imbalance here, right? As long as we remain below that, we're bearish. So keeping you guys on the right side of the market here. Price rotating to the downside. Like I said, this is a lot easier of a trade setup to work with if buy side is already taken, right? So that's why I'm comfortable here just tape reading the move, because I would have wanted to have seen buy side for my trading personally. But there's nothing wrong with shorting this imbalance here once the market broke down. And then looking at the 5 minute chart, as another gentleman I believe here is mentioning that breaker here, right? So we have a high run on stops, last 2 down close candles, right? That's why that 1 minute fair value gap was important, because it's inside of that breaker there. And then looking at the opening range gap, right? You can see they tried, after running sell side, they tried to take it up into it, but then we see the market did what? It failed to get the mid gap here. So that's signaling it's heavy, it's bearish, right? If it's bearish, it's going to trade down into discount levels, right? Sell side here. And then the midpoint of that daily wick. Like to see how at 10 o'clock, the market loosening up. So the market's starting to trade a lot cleaner now. So we'll let them take it into that midpoint of that wick there. It's a nice draw. All right, there you go. So there's that daily wick delivered. Again, let me cover how I got that level. Whenever there's a large wick like that, right? I don't always demand the lows, right? So if I was short on something this morning, I'd be covering partials there at the midpoint of that wick. So you can see what I was sharing with you guys with the intermarket analysis. Don't let it confuse you guys, right? Because a lot of people are seeing, oh, lower dollar, indices have to go higher. That is not the case, right? Indices are bearish, right? I covered that on the Sunday Outlook. I covered it this morning. That the weekly, daily, hourly, 15.5, it's bearish, it's heavy, right? You don't want to try to swim against that. I don't care what the dollar is doing. The price action is going to tell you if it's bullish or bearish, and everything is bearish for Nasdaq, right? So those of you guys that were saying bearish in the chat this morning, you guys were locked in. You guys were locked in here this weekend. So now we hit mid gap here. So from the fair value gap down to, or not mid gap, mid wick. Nice run there. Retain, miss the shorts. Always more opportunities, man. Always more opportunities, my man. No stress. No stress. Right. So if I ever, for example, miss the morning session run like this, then you just wait till 11:15, 11:30, right? And then you got the lunch macro that you can trade. Then you can trade the PM session, right? Then the last hour of trading, right? So plenty of price runs. No need to get excited over missing one of them. Med, would you have considered the first presented gap on S&P a good trade to sell short? Yeah, for sure. If the only thing that, like I said, if I would have taken it, it would have been a lower leverage trade simply because of the buy side there, right? I have rules, I have procedures. If there's equal highs, it's just slightly more difficult for me to sell short, right? Just because of the off chance that they may want to take it back up into it. But then one of the things that kicks in for me is my experience, which is seeing that top down, the market's it's weak, it's heavy, right? We called the weekly fair value gap, not because we're bullish, but the sell off, right? So that monthly and that weekly chart is heavy. So when I see that, they can still leave equal highs. So if I would have shorted that first presented gap on the ES here, right after we broke down through it, I would have done so with lower leverage, simply because the equal highs there. That's just something that's slightly more difficult for me to trust, but yeah, and then it's even better that it couldn't get up into the upper half, right? So we used it as resistance, staying in the lower half. That signals it's really heavy, and then the equal lows there, fair value gap, sells off, right? So after 10 o'clock, starting to get cleaner, low resistance price action, right? Where it's just running, right? Really nice price action to trade and be a part of. So institutional order flow entry drill here, fair value gap, partial entry up into it. Want to see if this up close candle here can act as a bearish order block, send price lower. What would be the next draw here? Let's get 25. All right, so the next draw here is going to be the lower 25% of that daily wick here. Still a lot more bearishness to come for index futures, right? And again, that's on the basis of that weekly chart, right? So you don't want to get sucked into your lower time frames and get lost, right? The higher time frame is bearish, right? So whenever they take it up into a premium, that's just creating new selling opportunities for smart money to sell into fair value. And so that's how I was able to predict the market going higher to going lower, just because it's seeing it so many times, so many years. So that's a huge point from today. You don't want to fade top-down analysis. So if the market's heavy on that weekly, that daily chart, you can go long, but you just want to be careful with overstaying your welcome too much. All right, so that up close candle here that we said we wanted to see act as a bearish order block, you can see we traded down through it, back up into it, and you see how it's respecting that. The reason that's an up close candle bearish order block is because this imbalance here was just institutional order flow entry drill, right? So we just had a partial entry into it. So that indicates that this up close candle is going to be a bearish order block, send price lower. Want to see if they can take it down into the lower quadrant, and then that would take us all the way down to the sell side. If we the way we're accelerating through midpoint of that wick there tells me they're likely going to want to draw it into sell side. Let me do some measurements here. like -1 here, 19,662. And then through that, we can get down into the 19,586 if we really keep accelerating. Don't fade the daily chart. Don't fade the daily chart. So really like what we're seeing here, right? Market breaking down, imbalances being left open, right? Fair value gap traded up into, couldn't even get to midpoint. It's all things that signal it's a faster market. All right, so that 1 minute fair value gap here, you'll see the market staying in the lower half, breaking away from that. Looking at like a lower time frame, like a 5-second chart, draw your sell side. Let me see the, and then the lower quadrant of that wick there, right? So just that right there, like you can use an ultra lower time frame and like frame scalp setups using using the draw liquidity and the bearish order flow. So what do I mean by that? Well, we trade up into that 1 minute gap, right? Couldn't get up in the upper half. That signals it's weak. So you can short using your models, right? Fair value gap here, breaker here, right? We'd want to see the market stay below that. We are already in a relatively decent discount after dropping a good amount. But for scalping purposes, those are things that I could do, right? Like if I have targets that I still want to see delivered and then the market confirms weakness, things I want to see, then you can use that for intraday scalps, just the key levels that you're looking for. It's like how they gave this doji reversal doji candle inside the fair value gap, staying in the lower half. That signals it's weak, right? So if it's weak, it's likely going to keep dropping. All right, so if we're going to get down into the lower quadrant here, or that daily wick, I'd want to see it stay heavy through that low. I wouldn't want to see it drop down and pull back up into the range. We'd want to see it stay heavy there. It says volume imbalance here. Market trading up into it. It's respecting that. That's positive for lower prices. Christopher short from 1005. Patience really pays off. Yeah, absolutely. Really nice trade. And when you're short on a good trade like that, and you start seeing signatures like this here, right? This imbalance here left open, that's a breakaway gap. These fair value gaps here being left open, right? Fair value gap here can't get to midpoint. Fair value gap here can't get to midpoint. Those are all things that tell you the market's really weak, right? Hold on to your trade. It's going much lower, right? So looking at the fair value gap here, right? Trading into it, staying in the lower half. Volume imbalance being respected. The sell side's now here. We have that daily wick lower quadrant there. So that sell side there, taken out. Like to see him stab it into that daily wick. JCA, so you see what I'm saying in the Discord with that daily new week opening gap you're asking me a couple days ago. Are we going to go into the new week opening gap here? And I said we're going much lower than the new week opening gap. See what I'm saying now? Market's weak, right? So it's not just going to that gap to fill that gap and go higher. It's just going to keep sinking through it. Because there's people that are trying to call a bottom in a bearish market, and that just never works out. That's a loser's game to play. I've never met a consistently profitable trader that makes a career off calling tops and bottoms in a market. Never have. You can do it intraday, right? Intraday, you can catch a knife or catch the high of the day, but on higher time frames like that, it's a very difficult game to play. So this level here is the draw. I want to see him take it into that level. All right, there you go. So you see what I was saying here with that scalping model, right? This is one of the things that I teach in terms of there's so many fucking opportunities in the market, right? There's no need to get excited about missing one, not being able to trade one. Because look, okay, the market's still dropping, but you can still scalp it, right? So for example, there's that 1 minute gap. It traded up into it, couldn't get to midpoint. That signals weakness. What's the draw? I'm lending you that here, right? It's this level here. The market's going to want to dig down into that. So once they take it up into that gap, it breaks down. Every model works when you know where the market's going, right? And I'm going to nail all your guys' models right here. Traditional fair value gap, probably the most popular one. Bam. Inversion fair value gap, which is a close second. Quite a few of you guys I see are trading the IFEG. IFEG works, right? And then look at the risk to reward that you can get on a 5-second chart, right? A 15 handle stop loss for a 35 handle take profit, right? So the inversion fair value gap is there. So what I cover, the fair value gap, inversion gap, which one am I missing? The breaker, the unicorn, folks. The unicorn, folks. So there's that bearish breaker. Extend that through, right? So now you have a breaker with the fair value gap, right? And the draw being what? This level down here. So just using the insight of that 1 minute fair value gap, being unable to trade up into that midpoint, and then when you see the draw in liquidity, that's a price run, right? That's a tradable setup, right? So one of the things that you learn over time is that there's no need to be concerned with missing price runs because there's constantly more of them. Just from the volume imbalance here, right? The volume imbalance here that I gave you, see how the market respected that? That signals it's weak, right? So if the volume imbalance is sending price lower quadrant, that's a little scalp in and of itself there that you can take, right? Nothing crazy, right? I'm not saying it's a, it's a home run trade, but it beats a day job. All right, so let's go and zoom out here. We're gonna need some further targets. So that'd be a good level to take partials, right? So like if we were short from something up here, we're also sweeping the bodies of the candles here and the lower quadrant of that wick. So those are all good levels to take partials. Why is the hourly chart so heavy? Well, look at this here, right? We have a breakaway gap, right? Imbalance is unable to get filled, so the hourly chart's really heavy. So we can anticipate the lower time frame being a really clean, low resistance liquidity run once it gets going because the market's so heavy. And then the other thing, I wanted to come back to this. So the gentleman that was asking me about higher prices, you see why it's so important to know how to read the candlesticks? Because what would have kept me from looking for higher prices here? My understanding of institutional order flow, right? So what I gave you is like buy side here isn't even a consideration until this fair value gap here is taken out. We maybe give a breakaway gap. What's a breakaway gap? Well, when we're bearish, you see the imbalance here is left open. That's a breakaway gap, and it signals it's going to be a really clean price run. These are the price runs that I want to trade here. So for me to even consider higher prices, we would have to do what? Get through this gap, use it as an inversion, find support, and rally higher. So one of the huge benefits of just knowing how to read the price charts is it'll help keep you on the right side of the market, right? Because once we started breaking down here, there was nothing to go long off of, right? Everything's short and sell side flows. And I know order flow is a big fancy term, but it's really just a simple way of saying study the PD arrays. Is the market bullish or bearish? Black Panther, the gray box has 0.5 in the quarter level. Why are you measuring it like that? Yeah, good question. So looking at the daily wick here, I don't like to have too many levels on the chart that I'm streaming on. So what I'm measuring here is the daily wick here, as you mentioned. Efficiency quadrant here. And just to not have all these levels on the chart, just the ones I'm referring to that were important for me today was the midpoint of that wick there. That was a draw, right? Mark's gonna want to trade into that. And then the lower quadrant. So that's just why I have those two on there, just to be mindful of those levels. I could have them all in there, but I just like to keep the chart a bit cleaner because then it's easy for those that are maybe just casually watching to get lost. And I don't want anyone to get lost in the sauce here. So that's why I'm just looking at the midpoint and lower quadrant. Isn't that the, oh, I see what you're saying. So wouldn't this be the 75%? It's, yeah, it could be, right? It's the lower quadrant, the lower quarter. That's what I'm referring to it as. Whether it's 75 or 25% isn't really changing anything either way. Slim, yeah, stay away till it shows you that buy side is on the table. Absolutely, yeah. Would like to see a short-term high be swept, then look for entry lower but never presented. Nothing wrong with that, right? Especially early on as we're developing, we're going to miss a lot of price runs. The best thing you can do is kind of what I'm sharing here with you, which is, okay, you missed your trade, but study, right? The market's still bearish, right? There's nothing bullish. We're going to draw into this low here now. So when you see that, then you can study other trades, right? Like this fair value gap here. That can be a silver bullet short the fair value gap with the stop here, right? Now you're shorting the silver bullet, right? That works. Or you can do like a scalper's model, like I was showing you, which is now you go into the seconds time frame and then you frame the price run to the downside, right? You can do that. The best thing to do is sit on your hands here. Like if you don't get your model, just be patient. And then as you study, naturally your arsenal is going to grow over time. And then you'll be able to do a whole lot more trades, a lot more setups, because you'll be able to see a lot more things. But that comes with time. It comes with experience and focusing on the right things. So keep doing what you're doing, Slim, and in no time you'll be able to just have the deeper bag that allows you to take down more opportunities as they present. So sell side, man, they're really taking it down here on this this daily chart. So yeah, once they book these equal lows here, I'll be content with that for the day. Black Panther, how do you use the lower quadrant next to the midpoint? Like the so how do you use the lower quadrant next to the midpoint? Yeah, right, yeah. Absolutely, right? So the midpoint here, that daily wick from when we were up here that I gave you, if the market is going to reverse, it can reverse from that level. But I use these levels in, well, 3 ways, but I'm going to cover 2 here. I can use it as a target, as you saw me do today, right? Because if it's going to draw lower into these lows here, well, maybe it's not going to get all the way down into these lows. And if I have a trade on, I want to be able to lock in some profit. So I would use that midpoint of that wick and I would be scaling something off there and then maybe letting it run to that daily low if I was trading. The second way I use these key levels is to read order flow. What does that mean? Well, if we're going to continue bearish, right, and we're going to accelerate into sell side here, then what do I need to see at the midpoint of that daily wick? I need to see the market slam through it, close below it, because that'll signal it's weak and it's going to keep trading lower. So there's 2 ways I use these levels. There's a target, right? You can use it because the market's going to draw into it, right? Same thing like the scalp setup that I just gave you on that 5-second chart, right? You could use it as a target, but I'm also using it to read order flow. Well, what does that mean? Well, the fact that the market's displacing down through it, smashing lower, that's signaling to me what? The market's heavy. It's going to keep drawing lower. If it's going to keep drawing lower, then sell side is not in play. So the levels are used in several ways, right? To read order flow as targets. And then the other way to use them is as entries, right? So I said I was going to cover two, but I'll give you the third one. The other, you guys are probably wondering. The third way is you can use them as an entry, right? So if I'm using this level as a target here, you see how it trades back up into it, uses it as real resistance, right? So, I mean, technically you could use that as a short entry as well, right? So these key levels have a lot of applications to them. It's just a matter of your present understanding of price action and what you're able to do with them. Any currency traders in here? Because man, you guys are absolutely crushing it today with the with that bearish dollar bias. So they dug into that first level of sell side here, so it looks like they're going to take it down into this one here. So what does that mean again for euro? Right, euro's just going to keep exploding, right? Buy a fair value gap. Well, which fair value gap, Dylan? All of the fair value gaps. It's easy trading when you're in a low resistance liquidity run like this. You buy, hold on for dear life, and it'll just rip into your targets. But that's the key, though. You have to be able to identify that it's low resistance because you don't want to get stuck in the mud in a high resistance like this stuff here. Look at old Bitcoin. See what Bitcoin's doing. All right, so Bitcoin trading into a short-term premium with a range low, range high. Fair value gap, respecting that. Still going lower on Bitcoin. What these rallies do is it suckers people in, though, right? Because then a lot of people here thinking Bitcoin's going higher, when in reality it's just trading up to a premium for smart money to sell short, and then keep going lower. Earning cable long, awesome, nicely done. So you guys are banking on the currency. Let me see, cable, nice. Yeah, we're bullish on currencies. All right, so again, market's still bearish. What are we seeing? Fair value gaps, unable to even get up to their midpoint. Fair value gap, unable to even get up to its midpoint. Every single up close candle is acting as resistance, right? I gave you this up close candle here as a bearish order block, real time. Trading up into that resistance. This up close candle here is also a bearish order block, so it trades up into that. I gave you the volume imbalance though, because these candles are printing so fast. If I were to talk about every single thing I'm seeing, it'd just be me constantly talking, right? It'd just be way too much. So I just point to a couple key levels, but order block with the volume imbalance there. Up close candle that dug into this one. This is a propulsion candle here. So order block, up close candle that trades into it. That's a propulsion block. Market hits it, sells off. Up close candle, market trades up into it, sells off, right? So in a simple way, I just broke down how you're supposed to read order flow. And if all those things remain true, then there's nothing bullish in the market, right? Everything's going to keep going lower. And let me see where we're at for S&P. Let me go to... I didn't even really touch on S&P that much, but it's the same thing for Nasdaq, right? So if you're a short S&P, all the targets I gave you, midpoint of the wick, lower quadrant, and it looks like they're going to want to run out that sell side now. So you guys can see in hindsight now, if we go up to that weekly chart, that what we framed as the trade into or the run into the weekly fair value gap was just a run into a premium, right? So you can see that was the Judas swing of the weekly range. They priced in the high on Tuesday going into Wednesday. And then now we're seeing the distribution of the week, right? So that Judas swing got people bullish, right? What I was seeing all over the place on FinTwit, buy the dips, right? Market's going higher. A lot of jokers calling the market higher and looking for higher prices and doing so very rudely, I may add. Talking shit about people that were bearish. And well, you see how that ends up. But interesting to note nonetheless. So they got just within striking distance that south side there. I don't want to see them dig it down into that. Hey, Lucid, what's going on, man? What would you need to see for TGIF to be on the table? That's a great question. So for TGIF to even be a consideration for me, I would want to see these targets reached and then a potential indication of bullishness. One of the things that we want to be careful doing is if we zoom out here, right, when a market is bearish, we want to be extremely careful with trying to go long, right? We can go long like intraday here. Like for example, on Thursday, gave a nice scalp into the equal highs that we were looking for in yesterday's live session. So other than just short-term scalps into a premium, want to be very careful looking for higher prices. So TGIF can still be a factor. I'm much more reluctant to buy a clearly bearish market. So that's my stance on it. I would need to see the same things that we look for every day, right? Maybe targets being reached, key time of the day where it makes sense for the market to retrace or reverse, and then signatures that it wants to reverse, right? So I just covered in great detail here bearish order flow, right? Every fair value gap perspective, every premium level sending price lower, and every up close candle sending price lower. So I would essentially just need to see the reverse of that, right? So I'd want to see bullish price action, displacement higher, fair value gaps unable to get filled, down close candle supporting price on the way up, right? And those are things that would allow me to trust a potential TGIF. But as of right now, I don't see that in the cards at all with how heavy the market is. Extremely bearish. Hello, can you show us your monthly results? Thank you. Yeah, sure. Why would you like to see them? Black Panther, what is TGIF? So it's thank God it's Friday. It's a saying in the United States. Thank God it's Friday, because most people are ready to get to the weekend. But what it means in trading is when you see a directional week, many times you'll get a retracement back into the weekly range, right? So for example, hold on, let me wait for this sell side here to get delivered just for motivation. I got you. I'll go ahead and motivate you. Monsi, I hope I'm saying that right, Monsi. I'll give you some motivation here in a minute. Let me get to this TGIF explanation, then I'll go ahead and pull it up. Yeah, I'll pull it up, Cyclops. Appreciate the reminder, sir. Yeah, so as I was saying, we'll go to this chart here because we're watching actively the market draw into these levels here, right? Because it's the markets are random. They can't be predicted. There you go. There's that sell side. All right, well, now that's been delivered, let me go and touch on TGIF here. So what do we know about weekly candlesticks or about candlesticks in general? They have a wick above and a below, right? So they have an open, a high or a low, and then a close, right? And then the higher and the low off that. So with these weekly candles, let's just go ahead and use, let's use this one for an example here. Let me take off all these drawings. All right, so we got a bearish weekly candle. What do we know about candles? They have wicks, right? So it's open high, low, and then we close up off that high. What TGIF takes advantage of is the retracement back into the weekly range, right? So when the market is closing off the low, we expect it to retrace. ICT taught TGIF, meaning we can actually measure and predict when these retracements happen. So Thursday going into Friday, once targets are reached, it's reasonable to see the market pull back into the range 20 to 30%. So then if you measure 20 to 30% of this weekly range, and then you study the setup that I gave on Thursday, Friday, pulling back up into it, closing off the low, that's essentially TGIF. And then what the fib settings look like for that. So I can go ahead and show you, probably wondering. TGIF. And then you can see it's a 20 to 30% retracement. So you see, look at how close that gets you to the true closing price there. That's essentially all TGIF is. But it's a time sensitive set, meaning that you look for Thursday going into Friday. But of course, as with anything, right? As with anything, I want to cover this as well. It's very important, right? It's also the absolute wrong thing to do to say, all right, it's Friday, let me buy the market wrecked, right? So you still got to know how to read order flow. You still got to know how to look at a price chart and take away what it's telling you, right? So you can't just have TGIF and think it's some secret, right? You still have to know how to read price charts, read market structure, read order flow, and then you can use TGIF with really good precision. But by itself, none of these concepts mean shit, right? Because we can just keep selling off the entire day, and TGIF not even be a factor, right? So I want to cover that very, very, very clearly as well, because I don't want you guys to think that it's just like one trick pony. Oh, so they did deliver that sell side for S&P. All right, so the equal lows on S&P delivered really nicely. So let me go ahead and dive into this here a bit. So S&P is the same thing that we looked at for Nasdaq. Lisa here, haha, come on, I want to buy. Yeah, I feel you, brother. We don't get in the shorts, or I would miss shorts, and then, well, let me just buy this thing. But hopefully I've been able to keep you on the right side, at least so far in this session. All right, so weekly chart here for E-mini S&P. We had this weekly fair value gap. So we traded up into it. Again, everything's bearish for indices. Nothing is bullish, right? So because that's the case, here we see the market traded higher, and you see how it hit lower quadrant. It couldn't even get up to 50%. So that's signaling it's really heavy. One of the things that I really liked, one of the reasons that I was able to predict with you guys on Sunday that the market would run out buy stops and then attack sell stops. And for those of you guys that maybe weren't there, I'll go ahead and show you that as well. I don't want you guys thinking, man, this guy's full of shit telling me all this stuff he called before the fact. Yeah, right. I'll show you in a minute. Don't worry. So we call the market trading higher into these equal highs, into the buy stops. Why? Because if institutional order flow is bearish, every run higher is a run into a premium, right? So they run it higher into the buy stops here. What does retail see there? Oh, the bottom's in the stock market. It's time to buy the market. And now look on top of that. There's equal lows here. So there's strong support and then we bounce. So the market's really bullish now because there's support. We have our double bottom pattern. Now the market has to go higher. And then look, they even go one step further. Now we have a bull flag. So they take it into a premium. They give them their bull flag to buy. Smart money's accumulating short positions here. And then the market's going to want to attack and distribute at the lows. Distribute what? Well, if they're selling buy stops, because retail's buying here, smart money's selling into that rally, and then into that daily volume imbalance that I gave you as a target, they're selling into this here. So if they're net short, how do you cover a short position? You have to buy it back, right? So where would you buy it back? Well, there's willing buyers here at a low price with either a there's willing sellers here at a low price that you can then buy back from. And then look at that really nice delivery there. Beautiful. Beautiful, beautiful. Went short from 99.20. Nicely done. Great trade, bro. All right, so I said I was going to cover results. Let's go ahead and share that with you guys here. So let's go to Twitter. Let's go to handy dandy Twitter here. Let's go to. All right, so first things first, let me go to what I just discussed here. So I said I would share that with you guys, and I'll go into the results for the month here. In the cards is suggesting higher prices, other than for a potential short-term retracement to a premium and continue lower. So what is it? So it's saying nothing in the cards for higher prices, other than short-term retracement. Let's go to the hourly chart. The market dropped down here into the sell side here, and then we saw a strong rejection of that to the upside. So as long as you remain below on the 4-hour chart, or sorry, above, as long as you remain above these 4 consecutive on that. Let me just pull up the arrows. Everyone understands arrows. The buy stops here is counterparty. And then from there, I'd want to see the market rotate to the downside. So when you understand how to read price action, you can read institutional footprints. What does that mean, right? They send it higher. Smart money's going to sell into that, right? So when you understand their footprints, how they trade, they're taking it into buy stops on the hourly chart and into a premium fair value gap. So what's a fair value gap? It has in the name. It's fair value. For what? For market maker selling. So market maker selling is happening in a premium here, and then they're going to take it lower, right? Continue, and this is what we saw in the price action here this week, right? Pumping up into a premium, and yeah, the bull flag was just the cherry on top, right? And then they melt it down into the lows here. So the market makers, they operate the market in a very simple way. You just have to understand how they do it, and then just a whole new world of opportunity opens up to you. And then for the gentleman asking about results here, so finishing up the month, 6.7% on just one of my accounts. I'm trading multiple accounts, numerous of them. So there's a lot going on with my trading. The reason I shared this one in particular was I actually made this available for my community, right? So the community that I trade live with every single week, this is the account I'm trading live with them. So for educating them, for showing them what they should be doing with their trading, with having a model, having a trading plan, right? Controlled discipline execution. I show this as a result, right? Because of course, if you're learning from someone that's coaching you how to trade, then they should probably be able to show you how to fucking trade, right? And do it the right way. So what is the right way? Well, there's plenty of ways to make money in the market, but consistent traders have some similar characteristics in common. What that is a plan, right? Consistent traders aren't just winging it, right? Doing dumb shit. They have a plan for how they're going to get in, how many trades they're going to take, what their risk is. And that's just what I'm sharing here. So you can see for the most part, I'm just taking 1 to 2 trades a day. This day I did have over 8 trades. What that is, many times I'm trading 2 sessions a day, right? So very rarely do I do this because I really try to keep my chart time low. Because I'm risking thousands of dollars on my transactions, I don't need to take a lot of trades to make a shitload of money. So that was a huge epiphany for me a couple years ago, which is why am I in here trying to trade every single price run when I can just do the least and make a shitload of money and live my life comfortably with that. So that's the epiphany I came to. So very rarely do I trade the PM session. So I don't want you guys thinking I'm over leveraging in one session, right? This is actually me trading multiple trades throughout the day, right? So did have a losing day here. So again, and I did take these losses live, right? So all these trades were taken live for the most part. So I do lose as well, right? So there's losing trades in here. But what you'll see is I'm not in a hurry to make it back, right? Slow and controlled execution. And this is what I was able to put up for the month of March on one live account, right? This isn't live accounts with business partnerships that I have. This isn't funded companies. This is just one live account that I trade personally for myself. So that's the business there. That's what I was doing. And then just short little message here, right? Because many people see these results, but I want you guys to understand what goes into it, right? It's hours of journaling every trade, right? Hours of reading price action to read price action at the level at which I'm able to show you guys here live, for example. And those are the things that really create the consistency, right? It's doing the boring things, getting in the reps. That's going to allow you to be a trader instead of a gambler, right? And of course, that's what I want for all you guys, what you guys want for yourself. And one of the biggest things that helped me do that, that's going to help you guys do that, is staying obsessed with the process, right? So focus on the process that goes into profitable trading. Then the results come naturally, right? We focus on everything ass backwards. At least I know I did, right? Start trading. I want to make a bunch of money. But what I didn't focus on was the process that was actually going to make me a shitload of money, right? Funny how that works. But then eventually, you get your ass kicked around a little bit, and eventually you learn how to do it the right way. At least that's the way it was for me. So hopefully my experience, what I'm sharing here with you guys, is going to allow you guys to shorten your learning curve and not have to go through all that silly stuff, put it that way, before you get the consistent profitability. Christopher, what software is it that you use to check your trading week stats? I use TradeZella. I'll have my team drop the link in the chat here, and you guys can check out the link that we use for TradeZella. And that's the software that I use personally for journaling and keeping everything organized. Also with those, I like TradeZella a lot. Also with those, I'm coaching one-on-one with the weekly calls we have, the coaching, the private mentorship. I do use mentor mode, which is really cool. So you can give access to other people to your results, and then they're able to coach you, mentor you better, because then they're able to see the actual data results. And it's allowed me to just take what I'm doing to whole new levels, not only with my own trading, but with those I'm coaching and working with as well. So the reason I'm not talking too much about the price charts is we just saw monster move, right? All targets delivered, midpoint of the wick, lower quadrant, all the way down to that sell side. This was a really shallow run though. So I'm not saying this retracement like we're going higher. I'm thinking they're going to want to slam it lower once more below that low for more offset distribution. And offset distribution simply means smart money that was short from all the levels we covered earlier this week. If they're short, they're going to have to buy back that position, right? So where are they going to buy that position? Here at the sell side, and then as they create new lows, they're going to buy back more as they're trading lower into the session. Christopher, thanks. Yes, sir. Can you give risk management for a 50K eval for someone with a 55% win rate? Need a balance between over leveraging and under leveraging? Thanks. Yeah, that's a good one. So one of the things that I particularly don't like about the 50K accounts is that for the most part with a $2,000 account, which is what it is, right? So if you have a $50,000 prop account, what are you really saying you have? You have $2,000 of drawdown or a $2,000 account. In my opinion, $2,000 is such a little amount of equity to work with. It's hardly anything. And what's going on with the TradeZella link? We are, I guess. All right, 1 second. Let me see what's going on here. I'm gonna get to your question. I didn't lose my place. All right, so as I was saying, for the 50K evaluation, it's really difficult in my opinion, and from my experience with having worked with over hundreds of traders now, A 50K account, in my opinion, is just a recipe for disaster, especially if you're trying to trade minis or big size with micros. And the reason I say that is because if you look at futures, right? So let's go ahead and look at futures and look at the margin requirements. Margin requirements for NQ and ES futures. Where is it? I want some numbers. They're giving me percentages, but that doesn't give me a whole lot. So look at TradeStation. What the hell currency in it? All right, well, I'm just going to go off what I know. I wanted to just pull up the official number just so I was giving you guys the exact number, but that's cool. It's whatever. It's about 20-some thousand to trade one Nasdaq contract. And for trading the micro contract, to trade one micro, the official margin is like over $3,000. So now there's discount brokers that allow you to trade with less margin, but the minimum margin to trade one micro is like $3,000 something. So saying that to say, right, you're trading in American markets when you're trading futures, right, which a lot more money's moved in, you know, America, first world countries. So it's natural that it's going to be more. $2,000 trading futures, you're way underfunded. You're way undercapitalized. So one of the things I've seen over time with those I'm working with is that naturally builds in more stress and creates bad habits because you're not focused on growing the account because you're so close to blowing it, right? A few losing trades with $2,000 and the account's roasted. So you're making something like trading, which is already hard, and you're making it extremely hard trying to trade with an extremely small account. So what I've learned now that does work with those small accounts is you have to trade it very, very conservative, meaning a few micros. I think anything over 5 micros, and obviously this depends on your skill level as well. Like if you know what you're doing and you have skill, you know, you already know what you're doing. You're probably not asking me anyway. But for those of you guys that are growing and learning and growing into consistency, man, anything over 5 micros is literally suicide for a $2,000 account, right? Because what, 3-4 trades and now the account's half blown, right? So it just makes something that's already hard extremely stressful. So what I've learned that is really effective, if you're trading the 2K accounts, size down significantly. So what I would recommend is 1, 2, maybe 3 micros, depending on your skill set. Then from there, you can have a scaling plan to grow it, right? So one of the things that I give to all those I'm coaching and working with is you have to have a plan for scaling. You'd be surprised in general how many traders just shoot from the hip and do random shit in their trading, right? It's unbelievable. You have to have a plan. Like I always talk about, you have to think of trading like a business. Well, what does that mean? When you're thinking of trading like a business, everything's accounted for. You're not just winging shit. So in trading particularly, you want to have a plan for scaling, right? So what does that mean? For every $2,000 of equity added onto the account, I'll add 1 micro on. So now what's that going to ensure? If you're starting with 2 micros, you're probably not going to blow the account with 1 or 2 micros. And then as you grow in your equity, which is every $2,000 that's added on, you can now add on a third micro. Now you're trading 3. And then once you make 4,000, now you can add on 4 micros. Then another 2,000, now you can add on 5 micros. And that way you can grow without being over leveraged. That's what I've seen to be effective for those accounts. But like you said, it's really difficult, right? Because you're teetering on like a razor thin edge of over leveraging and under leveraging. Here's my advice though. You're always better under leveraging. And this isn't financial advice, but you're always better under leveraging than over leveraging. So whatever you think is good, just go underneath that a little bit. And you don't have to worry about blowing the account. That's what I've seen is effective. And if you really have the skill set, you should be able to grow an account nice and steady with low leverage. And just give you guys some insights on how you can scale as well, right? So you want to have that accounted for. You don't want to just say, all right, I'm trading 3 micros and all of a sudden time to whip out the mini, baby. That is going to be a recipe to kill your account. You want to have a plan for scaling it based off the amount of equity that you have in the account and where you want to grow and take that account. Wasim, hey Dylan, much love, brother. Thank you, sir. Appreciate you joining. Great question, guys. All right, so we're getting into 10:53, so we're getting into the late hours here, the morning session. Let me see, dollar. Yeah. Targets have been delivered. It is late in the session, so that's probably going to do it for me here today. Hope you guys were able to take something away from this one. Bearish day, heaviness. And again, that's based off everything we covered top down, right? You don't want to fade the weekly and the daily candlestick. That's not an effective strategy long term. And then we looked at the opening range gap, right? Market gap down, tried to fill the gap, but couldn't get the midpoint here. And then when it breaks down, that's signaling it's weak, right? So it's really bearish if it can't even get above the midpoint of the gap. And then we had a huge down day as a result of that into the discount targets. What did we get? Like about it? Yeah, 300-point drop. So really nice drop on the Nasdaq into those higher time frame targets. And you can see the trading is so much easier now because the market's in a higher time frame expansion, right? The daily chart is moving to clear levels. The weekly chart is moving to clear levels. And you're going to see that's making trading so much easier when the market's moving and it's fluid. So really nice price action today. And then the AI doing it again, baby. And then look at that random low of the day for S&P and Nasdaq. Really nice. I think they're going to do one more dig down into it. That would make sense for me. But targets are delivered. So usually once that happens, I step to the sidelines. I'm content with enough, even though I can see they're likely going to want to dig it down once more. Like I tell you guys, there's price runs all day, every day, right? So there's never any need to get concerned with missing one. So hopefully the session was insightful to you guys. Hope you guys have a safe weekend. Lucid, my man, thank you very much. Please do hit the like button if you guys learned something here today. Jeff, great session as usual, Dylan. Thank you. Appreciate you, Jeff. Thank you guys for joining. Adrian, how do you see the PM session? So I'm in a bit of a difficult situation now, Adrian. What do I mean by that? Well, we've already had a huge daily candle expansion, right? So from the high today to the low, we've already delivered over 400 points. Can the market keep dropping another 400 points? I mean, it can happen, but the probabilities drop off. So what I do is I'm hands off. Once we get all these targets delivered to the downside, I'm content with enough. I'm done, and I move to the sidelines. So this would be a day I wouldn't be focused on the PM session. And if I was focused on the PM session, I have to see what the lunch hour does, right? So very similar to how I use pre-market when I'm trading the AM session, I use the lunch session to trade the PM session. So if you are going to focus on the PM session, do consider that we've already seen a huge daily range, but you can use the lunch liquidity. So when you get into your PM session at 1:30, look at what liquidity was formed between 11:30 to 1:30, and then that liquidity is going to serve you very well for trading the PM session. And then looking at the charts here once more, what do you know? We're seeing offset distribution below the low, right? So they reached the low, but this is a shallow run. Smart money has to get that trade off. How are they going to do that? They're going to dig it down once more below the low because people are trying to buy this. People are trying to catch a bottom in a bearish market. Remember what I told you guys about picking your bottom, right? So you don't want to do that. Let the market keep trading lower, and then that gives another price run to the lows. So smart money's offset distributing their short positions. Eslam, thanks for everything. Yeah, appreciate you guys. Appreciate you guys joining. Great questions. Great time here in the chat. Definitely something I'll be looking to do more often. Black Panther, have a good day. See you. Will do. You do the same, man. Thanks for the stream. Thank you, guys. Have a good weekend. Yeah, you as well, Christopher. Take care, guys. Slim, thank you, my man. Omar, thanks so much. Appreciate it. The best in analysis. Appreciate it, Omar. Thank you very much. I 100% agree. It's a bit better under leverage than over leverage. Great TA Dylan. Thanks for the live session. I'm still rocking in the 50s case. Yeah, nothing wrong with 50Ks, RJ. You know, and you're taking your payouts, you know what you're doing. So absolutely nothing wrong with that. Just bringing up from my experience, from all the traders I've worked with, coached, my experience, that man, $2,000 is a real shoestring budget to trade with. But if you have the skill set, you know how to manage risk, it's possible, right? You just have to, you have to know what you're doing. So nothing wrong with it. And if you're rocking it, making money, then that's the most important thing. Agent, thank you. Yeah, thank you, guys. Eslam, if you have 4 fair value gaps in a row, you want to see the upper one be a breakaway gap, and you want to see accumulation take place in the lower 2. So if you see 3 fair value gaps or 4, the lower 2 should keep price at bay, and you want to see the upper fair value gaps serving as a breakaway gap. Thanks, Dylan. Give the stream a like. Thank you very much. Kevin, what broker did you use starting out? AmpLive. I use AmpLive and TradeStation. Not recommending any. Do your own research on that. But those are the ones I have used personally, and I've had good, pleasant experience with them. Unicorn, take care, Dylan. Thanks again. Yeah, my pleasure, guys. Alrighty, folks. Have a good rest of your weekend. Stay safe. If you guys are already up on the day and you guys crushed it today, no need to keep pushing it, right? So make sure you guys stay up on the week. I'm going to go ahead, do a short review here on my end, and I will see you guys on Sunday to do it all over again next week, guys. Take care, stay safe, and I'll see you guys on the next one. See you, everyone.